Welcome to today's TLDR on crypto news, where I give you a quick rundown of the top crypto news stories from the past 24 hours so you don't have to waste your time reading it yourself. Let's jump right in. First article, CryptoFo SEC Chair Gary Gensler will quit when Trump takes office from Coindesk.com. The key takeaways? Gary Gensler, the current SEC chair, has announced he will resign when Donald Trump takes office in January 2025. This news comes as a bit of a relief to many in the crypto community who've felt like they've been playing a high-stakes game of regulatory dodgeball with him. Gensler has been pretty tough on the crypto sector, scrutinizing everything from initial coin offerings to how exchanges operate, making the crypto world feel like they're under a microscope. His exit could mean a change in how crypto regulations are approached. With Gensler stepping down, there's a whisper of change in the air, especially since Trump has expressed a more favorable view towards cryptocurrencies. This might lead to a more crypto-friendly regulatory environment. Trump's administration might not view crypto with the same skepticism, potentially fostering innovation rather than stifling it. There's a mix of celebration and cautious optimism, as they're also aware that politics can be as predictable as a roulette wheel. While some are throwing virtual confetti, industry leaders are cautiously optimistic, knowing that while Gensler's departure is significant, the road to clear, supportive crypto regulations might still be long and winding. So what can we expect with Gensler's departure? Expect some initial excitement in the crypto markets. Prices might see a bump, but don't go betting the farm on it. Crypto markets are still as volatile as a cat in a room full of rocking chairs. There could be a short-term surge in crypto prices as investors feel the regulatory heat might cool off, but long-term effects will depend heavily on who replaces Gensler and the policies they push forward. The crypto world might see a shift from strict oversight to perhaps a more collaborative regulatory framework. But remember, this isn't a get-out-of-jail-free card. New regulations might still come, but they could be designed with more input from the industry. Legislation might start to look at crypto not just as a risk but as an opportunity. Who fills Gensler's shoes will be key. If it's someone with a Silicon Valley mindset rather than a Wall Street one, the crypto scene could get a lot more interesting. But if it's another regulator with a just say no approach, well, the party might not be as lively as hoped. The crypto community is watching closely. The new chair's background could signal whether crypto businesses will need to duck and weave or stride confidently into the regulatory landscape. So while Gensler's departure might feel like a weight lifted, the crypto community isn't out of the woods yet. Next, Solana reaches a new all-time high. The key takeaways? Solana has just broken the $260 mark, setting a new all-time high. This surge comes after a period of recovery and growth for Solana, showcasing its resilience and the faith investors have in its ecosystem, which includes fast transactions, low fees, and a vibrant developer community. The crypto market seems to be entering a phase where altcoins like Solana are stealing the show, potentially marking the beginning of an altcoin season where less talked about coins start outperforming Bitcoin. Altcoin season is when the smaller, often overlooked digital currencies get their moment in the sun. Solana's ecosystem isn't just about DeFi and NFTs anymore. Meme coins like Bonk and Peanut are gaining popularity, driving community engagement. These meme coins, while often seen as less serious investments, are adding to Solana's ecosystem by bringing in new users and fostering a sense of community and fun around the blockchain. The expectations with Solana's future? With Solana hitting this new high, the expectation is for it to keep climbing, especially if the broader market sentiment remains bullish. Investors might look to Solana not just as a short-term gain, but as a long-term hold, expecting it to continue its ascent as more developers and projects flock to its ecosystem. There's buzz about Solana ETF filings, suggesting that big money might be starting to take Solana seriously. Imagine hedge funds and banks starting to talk about Solana at their fancy dinners. That's the vibe. If these ETFs get approved, it could mean a significant influx of institutional money, potentially stabilizing and further boosting Solana's price. As Solana leads, other altcoins might follow, potentially leading to a robust altcoin season where diversification in crypto portfolios becomes the name of the game. Crypto enthusiasts might start looking beyond Bitcoin and Ethereum, exploring Solana and similar projects for potential high returns, making the market more dynamic and less centralized around a few giants. So, with Solana hitting this new high, it's like watching the opening act of what could be a very exciting show in the crypto world. The curtains have risen and Solana's on stage, but the real question is, how long will the applause last and who else will join in the encore? Next story. 76% of meme coins promoted by influencers are dead. The key takeaways? Influencer promotions often lead to dead meme coins. A study found that a whopping 76% of meme coins hyped up by social media influencers turn out to be dead, meaning they've lost nearly all their value. Influencers on platforms like X and YouTube often promote these meme coins, which are cryptocurrencies based on internet memes, but the majority of these projects don't survive long term. It's almost like buying into a trend that's already on its way out. Short-term hype versus long-term value. The study shows that while there might be a short-term spike in interest and price due to influencer promotion, 86% of these meme coins lose 90% of their value within 3 months. This rapid depreciation can be attributed to the speculative nature of Memecoins, where the value is driven more by social media buzz than by fundamental utility or technology. Only 1% of these influencer-promoted meme coins actually achieve a 10x increase in value. It happens, but it's not common. This rarity underscores the high risk associated with investing in meme coins based solely on celebrity or influencer endorsements. It's a reminder that in crypto, as in life, not everything that glitters is gold. So what can we expect? Increased scrutiny on influencer promotions. With these findings, there might be more skepticism towards influencer-driven crypto promotions. People might start treating these promotions like a friend's overly enthusiastic but questionable stock tip. Potential investors could become more cautious, demanding more due diligence before jumping on the next Memecoin bandwagon promoted by influencers. The high failure rate of these projects might attract regulatory bodies to look closer at how cryptocurrencies, especially meme coins, are promoted online. It could lead to new rules or guidelines for influencers, like requiring them to disclose if they're getting paid to promote. This could mean a cleaner, more transparent crypto promotional landscape, where investors are less likely to be misled by flashy but empty promises. Investors might shift their focus towards projects with solid fundamentals, technology, or utility rather than those riding on the back of viral marketing. This could lead to a healthier crypto market where projects are judged on merit rather than memes, potentially fostering innovation and genuine growth in the sector. That's it for this video. If you haven't yet, please subscribe and share. It will allow me to continue making great summary videos for you. Thanks for watching. I'll be away for a couple of days and unfortunately unable to make any videos, but we'll be back next week for another TLDR of the latest news in crypto.